Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. I've spoken many times about how technology has significantly changed the way we're investing. The revolution is particularly clear when trading shares, with the ability to buy and sell Australian and US equities direct from your phone using an app. And now one Australian trading platform is applying that same approach to superannuation, giving customers the opportunity to directly invest their super into ASX 300 shares without setting up an SMSF. John Winters is the co-founder and CEO of Superhero, which is a supporter of Fear and Greed. John, welcome to Fear and Greed.
G'day, Sean. Thanks for having me.
First on Superhero, why did you decide to start a trading platform? There's plenty of options out there.
Yeah, it was an interesting journey. Been in financial services, private wealth, stockbroking for the last 15 or so years, and just saw that there's so much complexity for the investor to go through, even just to set up an account. So that was sort of the first challenge that sort of drove me to start Superhero. But also the view that all of my clients, when I was investing for them, a lot of them had self-managed super funds. And through the startups and things that we saw coming through, a lot of my friends and people my age were coming to me saying, I want to buy some shares. I don't have a huge amount of money, but I've got this big pot of money in super. Can I use that? And without a self-managed super fund, it's very difficult. So the idea really came from, how do we keep people's money within that superannuation environment, but give them control, give them access, give them that transparency that everyone wants these days, to be able to at least see what you're invested in, but also make a decision on where it gets invested, right down to individual shares.
Okay, so you're going to have to hold my hands through this. I always thought I could only do what you're talking about if I had a self-managed super fund, but obviously not.
Yeah, so it is a little bit different to a self-managed super fund. So it is a retail fund, so it's no different to the regulatory structure of, an IOOF fund or an Aussie super. It's the same structure, so it's an APRA-regulated public offer fund. But instead of choosing a balanced or a growth or a conservative investment choice, we've given you 300 investment choices, being the ASX 300, plus about 150 ETFs. You invest just like you would on the Superhero platform if you're an everyday sort of investor using money out of your pocket. You can come onto the platform and invest directly into shares using your super without having to put your hand in your pocket, but also not needing that ATO-regulated self-managed super fund structure.
Okay, so is the structure I'm actually buying into a super fund though? Like I can't just use my Australian super or whoever it is fund. I have to buy into a Superhero fund, is that right?
So we are a fully authorised regulated fund. So you can actually go onto our platform, you sign up, you put your tax file number in, and it will show you all of your existing super balances. So if you had a couple or some people have quite a number of super funds, some that they may not have realised.
Yep.
You'll be able to see that through the platform, click a button and transfer it over to Superhero.
Right.
So you actually have a Superhero super account. So
yes,
you would depart your Aussie super or your other fund, and this would become your super fund.
Okay, and are there limits on how much you can invest? And I suppose I'm thinking about checks and balances just to make sure that people are using it as a super account rather than a sort of day trading account.
Yeah, absolutely. So some of the things that we've heard probably more recently with the rise of buy now, pay later, and certainly when you're getting a home, is responsible lending.
Yep.
That's something that has become very front of mind for the banks and anyone issuing credit. And we've taken that same approach when it comes to investing. So your super is a long-term investment asset. It's not to day trade. So we've built a responsible investment layer into the platform. So some may say that, that's going to limit their ability to invest exactly what they want to invest in, but we've put limits, we've put checks and balances, so you can't go and put 100% of your portfolio into Afterpay.
Yep.
Right. Looking back over the last couple of years, it would have probably been a good investment.
A bad call, but
it's about diversifying and building a long-term portfolio. So we do have those checks and balances on the platform. It goes into the user experience. It's just part of it. It's all sort of set up and tells you how it works along the way.
Okay.
But you can go and build a portfolio of, a whole bunch of different companies.
Yeah.
But there are systems in place to help you diversify, to help you, get exposure to, offshore markets, Aussie markets, whether you're interested in battery tech or lithium or banks or, whatever it is. The whole platform sort of helps you along that journey.
Yeah, those checks and balances, of course, are for the investors. Good, because superannuation is a long-term investment and diversification matters.
Yeah, absolutely. So, if we took all of that off, it'd probably be great for business, that'd create a lot more activity. But, we want people to come on, build a long-term portfolio.
Yep.
And by almost slowing down the process,
Yep.
it helps people, set up those portfolios in a much better way by building a core portfolio of, ETFs, by then adding on a range of individual shares to give them that sort of that growth or that income that they're looking for.
Stay with me, John. We'll be back in a minute. My guest this morning is John Winters, co-founder and CEO of Superhero. So how is Superhero Super going? Like, how many users do you have?
Yeah, so it's only really been live for about 6 weeks. So we've spent about 4 years building it. So it's been a huge regulatory engagement. It's been an engagement with all of the various players. So you've got a trustee, you've got a member administrator, there's custodians involved. It's a whole range of different players. And, we've got Citigroup as our custodian. It's, one of the biggest in the world. There's a whole range of different players. And to get all of those ducks in a row, it literally took 4 years to get there. So we've been live for about 6 weeks, and it's growing pretty well. We've got a couple of thousand people who have come over already, and we haven't really started marketing it. We haven't really pushed it out. We just pushed it to our existing customer base. Mm-hmm. We've got about 125,000 people on the Superhero trading side of the business. So, just sort of letting them know this is what you could do if you wanted to, and really trying to build that sort of organically initially, without having to sponsor the tennis or, anything like that.
Yeah. The super space is very interesting. I mean, there's so much money in it, $3 trillion, and it's dominated by some very big players, be it industry or retail funds. But people like you and others are actually getting much more innovative, and you suspect, so long as those regulatory rules are in place, you suspect that super is going to become much more flexible going forward with checks and balances.
Yeah, so that's what we really strive for. So we don't want people to default into a super fund. So a default super fund is where you join an employer and they go and fill out a form for you and they pay your super to some super fund that you've never heard of. That's a really big financial decision that you're leaving up to someone else. So we want people to make an active choice in where their super's invested. So whether it's with us, whether it's with someone else, make that choice because it makes a big difference over the long term.
Yep.
So I do think that the industry is going to move to be more flexible. We all want control these days. We want to be able to go onto our phone and order a car to the airport. We don't want to have to call a cab rank. We don't want to have to wait for a car to show up outside the door. We want to turn on the TV and watch what we want to watch right now. We want that control. And whether you want to use it or not, people want to know that they can. They may not necessarily always use it.
Yeah.
So I do think the industry is going to change. But what is really interesting for us versus other major funds out there is when you do see advertising and marketing, and there's a lot of it across the industry, it is a big pot of money, but they actually dip into members' assets to pay for that marketing. And that comes off the member performance.
Yep.
We can't do that. We're a commercial business. We can't just go and take people's money and go and spend it on advertising.
Yep.
So we've raised about $40 million over the last 6 months to go and build the business. So we've got to tap into our equity capital to advertise the business, which I feel is sort of the right way to do it. We can't go and use people's money to advertise.
I'm in an industry fund, and every time I see that industry fund ad, it drives me crazy because that's my money they're using.
Exactly.
You are cheap too. So your brokerage for not just the Superhero Super, but Superhero product, your trading platform, is $5 for Australian stocks and $0 for the US. Is that right?
Yeah, correct. $0 for the US. So we don't like to sort of think of ourselves as a discount broker. We think we're a lot more than that. We've got some pretty premium products on the platform. So we offer the same sort of portfolio reporting that you would get with a big platform if you're a high net worth individual dealing with an advisor. So you get all the consolidated tax reports. We do have $5 flat fee brokerage, which at the moment is the lowest in Australia. And it's $0 brokerage when you buy ETFs, Aussie ETFs, and it's $0 brokerage for all US stocks. So we do see ourselves as being low cost, high value, and that applies to the super fund as well. So, the average industry fund is, circa over 1% as a sort of an all-in fee.
Yep.
Our fees are just under 0.5% per annum. So we are able to cut our costs significantly through the efficiencies that we've built, leveraging the tech. So it all comes back to the technology and the platform that we've got behind us.
Okay, so the obvious question is, how do you make money? Are you just that much more efficient? Is that what that means?
Yeah, so it is. It all comes down to efficiency. So we do actually make very good margins at $5.
Yeah.
We
Which suggests
on
everyone
you.
else at $20 is making really big margins.
Well, if we applied $20 to the volumes that we do, we'd be pretty happy seeing the numbers roll into the bank account.
Yeah.
But no, look, there's solid margins at $5.
Yep.
I sort of question why other platforms and major banks and things aren't doing, what we're doing, why they haven't built their platforms the same way. When it comes to US, we do offer zero brokerage on US trades. We don't take payment for order flow, which is something that has been in the media quite significantly lately about US trading. We take a small FX fee when you move money from Aussie to US dollars.
Yeah.
And then once it's in US, you can trade as many times as you like with zero brokerage. So it really is a low cost model, but we see it as a high value. So you get a lot for what you pay for it rather than just being a discount, no frills proposition.
We touched on this. Do you think what you're doing, and there will be people who come in the market to mimic you and provide alternate products, do you think that this will really disrupt that whole traditional super fund model over the next 10 or 15 years?
Look, I think there's a number of people out there that they don't know and, respectfully probably don't care about managing their money on a day-to-day basis. People are out
You're
there.
You're talking to one. It's okay.
It's just like, you know what, I'll just leave it there. Someone else can manage it for me,
Yep.
which is fine. But at least have a look at what you're paying in fees. At least have a look at the performance and make sure that you are in a good performing fund. So, if you're just going to sit it there, go and. I mean, the industry funds have performed very well. They do charge relatively high fees, but their performance is pretty solid. There's a number of funds out there, whether it's a retail or industry fund, that you can get a good deal. So our whole thing is make it an active choice on where your super's invested.
Yep.
If you want the control, we can offer that. You can invest in individual shares and ETFs through us. You can set up a portfolio and it'll auto invest for you through Superhero. So we just want people to take action when it comes to super rather than just sort of leave it there and, get to your mid-40s or mid-50s and go, wow, that's substantial amount of money, but it's nowhere near what I need for retirement. I wish I had looked at it earlier.
John, thank you for talking to Fear and Greed, and thank you for being a sponsor.
No problem. It's great to chat, Sean.
That was John Winters, co-founder and CEO of Superhero. This is the Fear and Greed Daily Interview. Join me every morning for the full Fear and Greed podcast with all the business news you need to know. I'm Sean Aylmer. Enjoy your day.